Hello and welcome back to Simple Money Podcast, Canada's own personal finance podcast presented in short and informative episodes. I'm your host, Matthew Seawick, also known as the Friendly Financial Coach. So first of all, Happy New Year, everyone. I hope that you and everyone in your life has had a safe and enjoyable holiday season. And before we jump into today's episode, I just wanted to remind everyone that we do have a Patreon account up and running, and any support that is given is truly appreciated. So many thanks in advance. And the link will be included in the episode notes. So for today's episode, we're going to talk more about the new ways that Canadians working from home due to COVID-19 can now claim some of their expenses to cut their tax bills. We actually covered this back in the depths of July last year, which now seems like a lifetime ago. And the reason why we're covering it again today is that we now know more details. So we're going to talk about who can claim this deduction, what can be claimed, how they can do it, and really the best way of doing it. So essentially, we're looking at every single corner of this program. And as always, if you have any questions, feel free to send me a direct email to info@ffcoach.ca. There will also be a whole bunch of important links in the show notes. So the way that this program works is that you can claim eligible expenses as a tax deduction. And for those that need a refresher on what this means, a tax deduction reduces your taxable income before taxes are calculated on the amount. Probably the most common tax deduction that most of you will be familiar with are Rrsp Contributions. And this new program, or I should say this updated program, works in a very similar way. When it actually comes to how much you're going to save by using this program, it really depends on which province you live in, but can range from about 0 to 50% of the reported expenses. And to find out the percentage that you would save, what you can do is you can look at your marginal combined federal and provincial tax rates. And this tax deduction has actually been around for a while, but this year the federal government has made it easier to claim by making a simplified version of the program called the temporary flat rate method, and making the more detailed version of the program easier to apply to as well. And deciding between these two versions of the program is one of the big decisions that you'll need to make. So the simplified version offers a deduction of up to $400 and requires no paperwork, while the more detailed version can offer a much larger deduction, which is limited to earned income, but requires that you record your expenses, provide proof if required by the CRA, and also obtain a signature from a superior. So basically the decision is between a quick, non-bureaucratic option or a more time-consuming option that can yield a much larger tax savings. The major criteria for both versions of this program is that you are required to work from home due to COVID-19 and that you had to pay expenses required for employment. These claimed expenses could also not have been reimbursed by your employer. And an important side note is that the basic version of this program that existed before does still exist, and the condition for claiming this is that you're required to work from home, and this is signed off by your employer. Importantly, the work from home aspect is defined as working for at least 4 consecutive weeks in 2020, where at least 50% of that time was done at home. If an employer gives that employee the decision to work from home or to go to the office, and the employee chooses to work from home, then this is deemed by the CRA to be working from home due to COVID-19. Under the simplified program, one is eligible for $2 per day worked from home, as beginning from when you meet the definition of working from home. These days obviously exclude vacations, days off, etc. So to receive the full $400, you would have had to have worked from home for at least 200 days during 2020. And both full-time and part-time positions can be included. Under the simplified program, you don't need to provide any paperwork. Now, the detailed method is a little bit more complicated, but can definitely be worth your time as you can claim all of your eligible home office expenses, which could turn out to be much higher than under the simplified option. The downside with this option is that you will need to keep records of your expenses, have to do some calculations, and have an employer sign off on a specific form. The work from home rule is the same under this plan, where you need to have worked for 4 consecutive weeks with over 50% of that time at home. However, one big difference between this plan and the simplified program is that you can only claim periods of time where you worked from home for more than 50% of the time. So to understand this important detail further, let's go through an example. So let's say Jean worked from home 3 days a week and then went to the office for 2 days a week, and this went on for 3 months. Then after that, he ended up doing 2 days at home and 3 days in the office. Under the simplified option, Jean would be able to claim all these work from home days. That's because once the clause of 4 consecutive weeks is triggered, then all subsequent days can be used, even if he worked for less than 50% of those time periods at home. Now, under the detailed plan, Jean would only be able to claim the first 3 months, and the rest of time he would be disqualified as he had worked from home for less than 50% of that time. Under the detailed plan, you can only claim eligible expenses incurred during the eligible periods that you worked from home. Conversely, you could also claim the workspace if it meets a specific definition provided by the CRA, and this is exactly how it goes. You only use your workspace to earn employment income. You also have to use it regularly and continually for meeting clients, customers, or other people while doing your work. And as mentioned, that's exactly how the CRA has it listed. So to qualify for the more detailed option, you would have to meet one of those two definitions. If you qualify, then it's important to understand which employment expenses can be claimed. So if you're salaried, you can claim electricity, heat, or portions of your condo fees that pay for these utilities, internet, minor maintenance of a work area, and importantly, rent. If you're also paid commissions, you can claim property taxes, property insurance, and leases for select items like cell phones, and surprisingly, even fax machines if anyone's still using those these days. There's also an additional form that can be used to claim for certain cell phone expenses and office supplies. Expenses that cannot be claimed include mortgage interest and principal, capital expenses, wall decorations, and a handful of other expenses. As you can see, this list has quite a few items, and in many cases it may make more sense to do the detailed deduction instead of following the simplified plan. Now, unfortunately, the calculations don't stop there. What you need to do is you need to determine the proportion of the eligible expense that was used for employment, and this is a two-step process. The first step is to determine the percentage of space used for your workplace compared to all finished space of your dwelling. Finished space includes hallways, bathrooms, kitchens, bedrooms, etc. And to do this, you're supposed to measure the space that you use to work and then divide it by the total size of the finished space. This then gives you a percentage of what can be claimed. But unfortunately, that's not it. You also need to determine the amount of time that was used at this space for work purposes. If you have a dedicated workspace, then it's simply 100%. But if you only use it partially for work and then split between personal use, then you need to determine the weekly work hours that you use that workspace and then divide it by 168. And the number 168 is how many hours are in a week. This then yields a percentage of time that this space was used for employment. Then the final part of the equation is to first multiply your eligible expenses by the percentage used by the workplace. Then this amount is multiplied by the amount of time that you use the expense. And then the final amount that's spit out by this equation is then how much you can claim. And I know this is obviously complicated, and I hope I didn't put you to sleep, but thankfully there is a calculator available online to help with this. And I'll share this in the link of the show notes. And then when it comes to what kind of records you need to keep, I would recommend that you keep copies of measurements, expenses, and calculations in case your file ever gets flagged for an audit. Home expenses are unfortunately one of the largest causes for audits. So the big question, is this really even worth your time, right? Does it make sense for you to do all this work only to find out that you're going to save an additional $25? So generally, if you're paying for rent or if you have a dedicated workspace, then the answer is probably yes. Also, if you only worked from home for a month or two, then it probably won't be worth the time to do all the legwork to determine how much you would save. However, in some cases, the tax savings can be drastic. Now, to claim these expenses, you also need to fill out some forms. I'll include those forms in the show notes. The government also created a simplified version of the form. So if you're just claiming these home office expenses, then you can simply just have this form filled out by your employer. And the additional money that you receive back from this tax filing can be used to jumpstart another type of financial goal. possibly putting money aside for an emergency fund, paying down debt, or really anything else. So that's it for today's episode. Thank you so much for joining us. As always, if you have any questions, you can send me a direct email, info@ffcoach.ca. And don't forget that we also have a Patreon account, which really helps keep this show running. So thank you again. Take care, and we'll talk to you soon.